Hey everyone, welcome. It is March 6th, 1 p.m. We just got the closing bell and we had a pretty active day today. I have the screen up where we have this VIX trade that we want to come back and revisit and close this one out since we don't need that hedge anymore, like we talked about this morning. But let's take a look at what happened in our indices. We said today that it was most likely going to chop sideways and not get a whole bunch of direction because even though Powell was speaking, he was unlikely to say anything that would send markets flying. And even if he did, we would still have to get over this resistance up here or this EMA 20 or uptrend line right here. And he didn't say anything crazy, nothing too unexpected. And we did trade in a sideways range today and close almost like a doji candle, just slightly lower than the open, and up 0.52% on the day, which brought us above the EMA 8. So it's a bounce. It's a bounce off of the EMA 8. We have the entire bar above the EMA 8. We'd be a little bit more comfortable if it was a confirmation bar, if it was green and the close was above the previous day high or open. We did not get that, so it's not truly a confirmation bar, but it is at least some sort of bounce off of that EMA 8, and things are looking positive, or at the very least, the end of the week, unless there's anything major coming out. And I don't think there was, but we can verify that. Let's go over here to the Fed Watch tool. No, not the Fed Watch, the news economic calendar. Make sure that's up to date. And we have Jerome Powell continuing to speak tomorrow. Not really going to say anything new that he didn't say over here. And he did say that we're likely at a peak and we are going to cut, but later in 2024. But that was what we were expecting anyways. So international goods and services, jobless claims, those will be important. As long as they're not wild and crazy off the mark, off of consensus, then we'll be fine. We won't do anything because Powell is already saying, hey, we're just checking out the data. We're going to see if there's any anomalies, but we are very likely have peaked. We will start cutting sometime in 2024. So for now, there's no reason for them to take action, and they are waiting to see. And that's exactly what is now. Well, it wasn't priced into the market before, but it is now being priced into the market. And the markets, if there's room for it to go up, then it can slowly resume to the upside as long as it doesn't get too wild. Now, before we were talking about, in order for us to sustain this move upward, there has to be new injections of cash to the markets. And where would those new injections come from? If the Fed is cutting or planning to cut, there's not a lot of injection. If there is promises of investment or tax cuts or whatever from incoming president nominees, that won't hit until much later. So the market may react to the news, but there's no new cash coming in. There's no new source of cash coming in just yet. So that cash has to be stuff that has been on the sidelines or retail traders bringing cash from other sources into the stock market. And I don't know, I think if they were going to do that, they've already done it. We're just waiting for a capitulation bar for us to see if we're going to break down. And it doesn't seem like it's going to happen anytime soon. So this sideways motion, we're going to expect that to continue for maybe another week until we challenge either the upside or the downside once again, and then we'll be squeezed. Then we're going to make a decision. This morning, we had about a 60 to 65% chance that we may challenge to the upside, and I'm still very comfortable with that based on today's trading. Let's take a look at our QQQ. QQQ, similar. We got certainly above the EMA 20, and it looks like we're sitting right on top of that EMA 8. So that is a nice little bounce off of the EMA 20, and we're above the EMA 8. That's looking good. Once again, we prefer that this be green and to have closed above the open right here or the high right here to give us a confirmation bar. So we'll see tomorrow if we get confirmation. I think money is coming in. It's allowed some investors to be a little bit more comfortable about what was happening. That was a tiny bit of relief. And so more money might go into things like NVIDIA, the leaders, the people who felt like they messed out over here. They're starting to come in. We're not quite parabolic yet. This distance between the EMA 8 and where we closed is not that much greater than any of the previous two bars. It is greater, but not that much more. So we closed at 887.34, and the 8 EMA is at 82732. So that is 60, almost exactly 60. And if we look at the previous day, then we're at 859 versus 810. So 49, 40, 49. 49, so about 50. This was 60. So it did increase a little bit, just not that much. So it is at the very beginnings of starting to look like it might be going parabolic. And we can see that we have already moved up quite a bit. This whole movement right here is actually a slow parabolic move. It's not a steeply parabolic, it is just a gradual parabolic. It's still parabolic, and we are up here at our +3 ATR. So we don't want to get too excited about movement into names like NVIDIA or 2-day basis. This is looking kind of bullish, and then we may have a little bit of pullback. If we have a little bit of pullback, that's going to limit how much the QQQ can go upwards. So once again, we were talking about how the SPY was trading in a range, and we could say the same thing about the QQQ. So we're going to be limited in this box over the next few days, maybe entire week, and then we'll make a decision if we can break out or move down below. Let's take a look at the Dow Jones. So did money leave the Dow Jones and start going to riskier assets? Sort of. The Dow Jones is up 0.27. It's not up nearly as much as the QQQ. QQQ was up 0.64, and the SPY, I think, was about 0.4, 0.5. Okay. So if we look at Dow Jones, it did go up. It didn't benefit as much as the other two. It did close right at that EMA 20, though. So at least it looks like we sort of maybe potentially have bounced. It could have been like this, where we came a little bit below the EMA 20, and then we're starting to move up higher. We'll just have to see if strength can come back into these markets, but you can see that the Dow Jones is trading in this box as well. Okay, so we'll just have to see how all of this plays out. The only major difference here is that the Dow Jones is very close to its squeeze point. It has to reach a decision. It's being forced into a decision very soon here. That's probably not the best place to draw from. Maybe over here. is a little bit better. Okay. So we're getting squeezed a lot more. Oh, just the top of that box, right? This range right here is getting pretty narrow. So it's getting squeezed. We may see a decision in the Dow Jones before we see it anywhere else, which would be interesting because generally the Dow Jones is not leading. We would expect growth stocks to lead. It doesn't matter if it's on the way up or on the way down. But this time we might get a decision in the Dow Jones before we get a decision in the growth stocks. I'll take a quick look at IWM and see what it's doing. What's really interesting here, yes, it is range bound right here, but ever since this pullback to the EMA or to the MA50, we've been trading in a triangle right here. This is getting squeezed as well. The difference is it's being squeezed in a different direction. So we've got it's looking like we're getting squeezed higher and higher, and it may be more likely that we're going to go up than we're going to go down. Whereas in the QQQ, I guess it's the same direction. Same direction, never mind. But it is a little bit more, I would say this is, if we can break to the upside, that's going to be very interesting because then we have the potential of small cap stocks leading. It will take a little bit of time for the IWM to catch up to the SPY and the QQQ. And then if it can surpass the SPY and QQQ, then we'll be really looking at a bullish market. So this is just the first, almost not quite the first step to seeing all of that happen. We just have to wait and see if we break up or we break back down into this pink line range. So that looks like it's, again, the next week is going to be fairly critical in deciding that. Let's take a look at our CPC, see if that came down a little bit. We did not get an updated number, looks like, so too early to look at that. And then we'll take a look at our VIX. Okay, VIX is, interestingly, it's up versus yesterday. So that is really interesting because our indices are up, or our volatility is slightly up, which means that market makers are more uncertain, even though we're moving up. That's not a positive sign. So we would want to be very careful and be very wary over here. So SPY VIX is directly related to the SPY. So we'll look at that. So even though we made it above the EMA 8, what the VIX is telling us is that market makers are not super confident that we're going to make another all-time high. We might touch and challenge, but they're uncertain. They're not convinced that this was a bounce. So we still need to be careful. We need to still point our portfolios to the upside, but be very, very careful. We either want very small allocation or we want to do some pairs trades or we want to have a hedge in place. So we would do a new hedge though. We wouldn't keep the same hedge that we had from a couple days ago on the QQQ or the VIX because that's already done its job. It protected us on this movement downwards, or more accurately, it protected us on this QQQ movement downwards to the EMA 20, which was exactly what it was supposed to do. So those hedges should have come off already. And if we want to put in a new hedge, then we put in a new hedge. The protective power of the hedges that we put on before is now very limited. You've lost a little bit of time, and it already protected you against the event that you wanted protection from. So you've got to refresh it. You've got to put on a new hedge if you still want a hedge on your portfolio. So I'm going to go ahead and close this one since it's done its job. Okay, and then right now, based on your portfolio, how much of a hedge do you need? Because you might already have pairs trades. You might already be a very small size. So it's not necessarily It's not, you don't necessarily need to put on a separate portfolio hedge if all of your positions are already individually hedged. Just something to be aware of, that VIX is not telling the exact same story as the price action. And then let's take a look at bonds. Bonds continue to move up. So what we need to know is this a flight to safety, or is this an actual indication of rates going down? And if it is an indication of rates going down, that is a little too optimistic of the bond market. So I'm going to take a look at this Fed Watch tool, see if any of the percentages changed. 5%. So it has crept higher. We're at 4%. Now we're 1% higher. And then in May, we're at 24%. Before we were at 20%. So that seems like some pretty unreasonable enthusiasm to me. It's not a huge difference. It wasn't a huge bump up, but it is definitely a change. 55, 65, 69%. Yeah, we're only at 61%. Now we're at 69%. A cut by June. I could see reading July or September. June is maybe a little too early. Definitely May and March are off the table as far as the Fed's radar screen is concerned. So this movement upwards is not entirely rational on the TLT part. Okay. So we may be getting out of whack in the TLT. I need a couple more days to determine exactly, but I suspect that this is unreasonable movement and that we're going to pull back down into range. Let me move this purple line a little higher. Okay. So right about there. Okay, why there? Because of this, because of this, because of this, and it just happens to be where we are right now. So I did not look at this in determining where to move the line. We had some consolidation right here. We had a peak right here. We had a peak right there, and some consolidation right here. So I would be very surprised if we move up here without any real announcement or a statement from the Fed, which we haven't gotten. And Jerome Powell is testifying right now, and we haven't gotten it. So this upward movement is just a little tad too unreasonable, and we should get a down back. So we've got some pressure from the upside, so meaning that the limited upside potential. Everything's very mixed right now. So that gives me just more confidence in that we're just going to see some choppy sideways movement over the next few days, over the next week. But again, we are getting very close to a decision point where it's either has to go up or it has to come down. Or we could chop sideways through it, but chopping sideways through it would be the same thing as coming down. A big signal weakness in the market, and we wouldn't expect that it would continue to chop sideways for much longer after it chopped sideways below the uptrend line, if that's what actually happens. Okay, so let's take a quick look at our sectors. We'll take a look at momentum. We said this morning we would look at momentum as well. Let's do that first. %, that's coming down. We're expecting that to hit, well, I guess more on the individual SPY. Let's look at that. SPY, 71%. That is a little too exuberant. Yeah, so we came down and we bounced back up to 70. So that's looking sort of like this, where we came down and then we bounced back up. Or right here, we came down, we bounced back up. Over here, is that the same one? No, that's a different one. So we came down, we bounced back up. So here we came down, we're bouncing back up. But after that, in the next 2 to 3 months, we were expecting it to come down to the 30 to 40 region, just like right here. Just like this bounce came down to 30. This one came down to 37. And this one came down to 20. So over the next couple months, we really do expect this still to come down to this 30 or 40 region, which would be the pullback or the correction that we've been looking for. So it doesn't, once again, not necessarily imminent, or what we're looking at right now is sideways chop. And then sometime in the next 2 to 3 months, that pullback or correction. Okay, so that hasn't changed all that much. The longer time frame, which is to be expected. Longer time frame, our views should move a lot more slowly than shorter time frames. So what was that sectors? Let's take a look at sectors. Okay, so we still have tech leading on a longer term basis, and U and P, all the defensive stuff down. Let's look on a 1 week basis. We've got XLB, XLI right at the top. Other than home builders and retail, these are a little bit more minor sectors. So out of the 10 majors, we've got XLI, XLB, we've got semiconductors way up here because of the AI weirdness that's going on. But then we've got small caps right at the top. So that's a little weird. So we have defensive, 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 somewhat neutral. And then we have the growth, K, Y. This is actually almost defragmented. The only weirdness is that K and Y and P and U are all at the bottom. So we've got the most speculative and the most conservative right next to each other at the bottom. And then we've got the kind of medium speculative at the top. But all of our pairs are pretty much in line with each other, right next to each other. So based on that, we could see money come back into K and Y and conceivably see these two start moving upwards. And then we would have a good order of things. We would have the K and Y at the top. Then we would have B and I, or FE and V and RE in the middle, and then P and U at the bottom. That would be a nice and natural order of things. So based on where we are in the sectors, the balancing out of the sectors, that pullback to the EMA 8 was actually very helpful on a 1 week basis. So, or 1 month basis, we're on 1 month basis. So at least on a monthly basis, we look like we're kind of clear to go upwards. It's not a guarantee that we'll move upwards. We're just saying that we've removed one of the forces preventing us from moving upwards. That's really interesting. Let's take a look at this on a weekly chart. Okay, so that's an amazing chart. It was almost straight up, one tiny pullback right there, a pause right there, and now a pause again right here. So that does look like we did not break this trend line at all. So this does look like on a weekly basis, this does look like it could easily continue to move upwards. Let's look at a 1 month basis. Okay, so 1 month basis, we would say that our momentum is petering out. And so we may be forming a top right here. And so we're limited. So we've got a few interesting time frames here. On a daily, we're going sideways, but we're seeing less forces pushing us down. On the weekly, it looks like we could still continue upwards, but monthly is telling us limited to the upside, or at least we're slowing down, moving to the upside. So we could be approaching some sort of peak we're talking 1 month to the next month time frame. Okay, so we're talking at least 1 month where we form another bar, and where that could be a flat bar or a down bar. So on a 1 month basis, we're looking like we're kind of topping out, but on a 1 week to 1 day to 1 week basis, it looks like we have room to move upwards. Okay, so what does that room to move upwards look like? It could just mean the top of this bar right here, which would be the top of our psychological resistance. So on a daily basis, we would just call that sideways movement. Okay. So, and same with on a monthly basis, we would just call that a sideways movement. So we've got a lot of mixed signals here. So that means uncertainty, which means I'm going to favor a little bit more chopping sideways than any direction. So that's just another reinforcement that our viewpoint is that there's a stronger probability that we're just going to chop sideways until we're forced above this line or below this trend line right here. Okay, so given that's the case, our strategy is the exact same. Net long on our portfolios, but not super long. We're going to decrease our size, or at least decrease the amount that we're long versus the amount that we're short inside of our portfolios. So we either have natural hedges on, we have pairs on, specific pairs on, or specific hedges for each position that we're in, or we have a hedge on our entire portfolio, which we just took off, at least in the example trades. But you would want to, if you don't have individual protection, or if you don't have very small size in your actual portfolios, then you would be seeking to either reduce your size, put on some natural hedges on each individual position, or just put on a new hedge on your entire portfolio. Okay, so you should know how to do that by now, after several months of me focusing on hedges because of the environment that we've been in. But if you want to take a stab at putting a hedge or examining a hedge, and then you can send it to me for some feedback, I'd be more than happy to take a look at that. So at some point, you got to be able to do things on your own instead of just watch me do it all the time, right? So if you want to, go ahead and take a stab at it, send it to me, and I will provide you some feedback. Okay, so that's going to be it for today. I will see you guys tomorrow morning before the open. Have a wonderful evening, and I'll see you in the morning.